Good morning, everybody. It's Michael here again with your latest installment of the Back to Basics Supply and Demand series for you. I hope you're all keeping well in the new year and beginning to settle in. We're going to have our first full week of trading coming up after the holidays, so hopefully your plans are all set in place for the year. Let me start off by saying thank you to all of you who've been in touch and made your views known about the Back to Basics series. I appreciate the kind words. Those of you who subscribed, those of you who've clicked the like button or left a comment on the videos, it's much appreciated. I didn't realize how much demand, no pun intended, there was out there for these Back to Basics videos. Now I know. So thank you to all of you who've been in touch, and to those of you who've shown your interest in the video courses or the one-to-one training. Some of you are coming on board, so that's great. As usual, if you wanted to contact me, you can see the email address on the screen. So if you had any questions, just let me know. So today I'm hoping it's going to be a shorter video than the last two. Because the concepts we're talking about today, I'm going to merge two concepts into one because they're both really short. It's the filters we're going to be talking about today are the time spent at the level and whether or not the level is, as it's called within the methodology, fresh or not. So those are the two concepts. So one of the ideas within supply and demand is that the less time spent at a level, the better. That's one of the slight differences between supply and demand and support and resistance. So with support and resistance, we're all taught when we start trading and we take our technical analysis courses like I did, that you want levels that have been touched several times. Prices have been there and have held, whether that's above where price is at the moment, which would be a resistance, or where it's below where price is at the moment, which would be support. So you would have been trained that a level like this, for example, would be an area, and support is always an area, contrary to popular teaching that it's a singular price level. It's always an area. So this area would be support, and somewhere around here would have been resistance before the breakout, and it's come back and retested, as you can see, and it's now going through it again. So that's support and resistance. With supply and demand, the difference is that we're looking for much smaller formations to start with, in terms of the rally-based rally, the drop-based rally, the drop-based drop, and the rally-based drop. They're smaller. So if you look at those four formations, they're only made up of three parts. A base is in every single one of them, and what determines direction is what comes after the base. Okay, if it's a drop, then it's a supply zone. If it's a rally, then it's a demand zone. We're looking for smaller formations, and we're looking for them to not have spent, for prices to not have spent as much time at those levels. Now, within the methodology, we are taught 1 to 3 periods is the sweet spot, and then anything up to 6 should be your maximum. 1 to 3 you can understand, as we just said, based on the premise that the shorter the time spent at a level, the better, with a big move away. Remember, it's those big moves away that attract our eyes to imbalances. So you trace it to where it started from. For example, if we're looking at this area, for example, you see the big move away, it attracts your eyes. Prices are there right now, they're sitting at that level, so you're there. You now want to count how long did price spend at this level. It's a filter to help you look at the quality. The methodology says the less time spent, the better. So I want anything, my ideal is 1 to 3, but but I can take up to 4 to 6. I'm speaking generically now as a trader assessing a zone. What do you guys think about 6? Now, I'm trying to get you to think critically. Why 6? Why not 7? Why not 5? Why not 10? There's really no reason as far as within the methodology. It's an arbitrary cutoff. So you will see on this same chart, and again, this is a random chart that I opened up. I haven't necessarily looked at it, but right here where we had the origin of this big move, there's a base right there. Yeah, what type of demand zone is this? It's a rally. There's the rally. It's a base, and it's a rally out. That's the rally out right there. Yeah, and then price is pulled back into the base, and then you had the big move out. Well, let's count how many candles are in this base. Remember, within the methodology, we look for no more than 6. That's what we're taught. But here we have 1, 2, 3, 4, 5, 6, 7, 8, 9 candles. Not ideal, but it worked. And I can show you, the longer you trade within the methodology, the more you will see these kinds of scenarios. Is this an ideal base? No. Do these bases sometimes work? Yes. Should you have a method of assessing quality looking at the time spent at the level? Absolutely. Would you score this base high? Absolutely not. Why? Because it spent 9 periods. Would you ignore that base? Not necessarily, and I'll explain why. So when you are doing your scoring of the quality of the level, remember we said 1 to 3, you give it your max score, whatever that is, whether that's 50%, 1 out of 2, 2 out of 3, or 2 out of 2 rather, 3 out of 3, whatever measure you're using to score. Time at the level is, maybe I should have said this at the beginning, it's not one of the main criteria. It's important, but it's not one of the ones in your scoring hierarchy that you would score. You would want how prices left the level, as we did 2 videos ago, to have a higher max score, for example, than time spent at the level. Okay, so you might, if you're going to give strength of the move away a max score of 2, for example, in your scoring hierarchy, or 5, time spent at the level, you might want to give it a max score of 2 if you're using 5 for strength of the move away, or 3, but it shouldn't be at the same level. So you're kind of differentiating and putting a filter inside a filter, if you like. So strength of the move is a bigger, stronger, more important filter than time spent at the level. I hope that's clear. Okay, I'll try to come back to it again as we go on. But you're looking at time spent at the level as a filter, one of the filters, but it should not have the same weighting. That's the word I was looking for. It shouldn't have the same weighting in your scoring system as, say, strength of the move away. Okay? That level has 9 periods. Now let's just go to the left of that and look at this level. This level had just 1 period in there. This drop, base, drop. Let me center that so you can see it. This drop, base, drop supply zone had just 1 period spent in there. That would get a higher score than the level we were just looking at, than this level. Both are levels, both are bases, but this would get a higher score for time spent at the level because it is within the parameter you've set of 1 to 3. You can decide you want to do 1 to 4. You can decide, you know what, if you spend 1 period, I'll give you a score of 5. If you spend 2 periods, I'll give you a score of 0.5. If you spend 3 periods, I'll give you a score of 0.25, whatever the structure you set. So the higher the number of periods spent at a level, the lower the score within your scoring of the time spent at the level. You can have your max time spent at the level, for example, as 10 periods. If prices spend 10 periods at a level, it gets a score of 1. If it spends 1 to 3 periods, it gets a score of 5. If it spends 4 to 6 periods, it gets a score of 3. Okay? So you're lowering your score the longer time price spends at a level. So you have leeway, you have flexibility in what you do. But what you don't want to do, just to put it out there, is to start looking at levels that go beyond 10. Ideally, you don't even want to go beyond 6, as I said. You don't want to go more than 6. If you want to stretch it out a bit and say, well, I'll go to 10, but I'll give it a really low score if it's anything between 7 and 10. If it spends 7 periods, 8 periods, 9 periods, 10 periods, then it gets a much lower score. If it gets 4 to 6, so you have a sort of hierarchy. Let me write it down on the screen so you guys can have a look at what I'm talking about. So you could have a hierarchy. You're assessing time spent at the level. That's what you're assessing. So your hierarchy within this assessment could be, if prices spend 1, 2, 3 periods, score will be that's the max score within time spent at a level. So you could give it a score of 5 out of 5. Okay. If prices spend anything from 4 to 6 periods, you could give it a score of 3 out of 5. If prices then spend anything from 6 to 10 periods at a level, you give it a score of 1 out of 5. You could even add an additional filter to this 6 to 10 periods, for example, and say, if you're going to spend more than 6 periods at a level and move away, rather than that minimum 2-to-1 move away that we talked about in previous videos, rather than moving 2-to-1, if you're going to spend more than 6 periods, I'm going to need you to show me more quality and move at least 3-to-1 or 4-to-1 distance away before I can even score you a 1 out of 5. Otherwise, you get a 0 for just being above 6. How very dare you? How come you spent, more than 6 periods at that level? So you can have a hierarchy within a hierarchy. This is the basic. It's the simple version. It doesn't need to be more complicated than this, but you can make it such that you make price jump through more hoops. You make your filter really, really tight, so you're getting quality over quantity when it comes to your levels. Okay, so that's for time spent at the level. The less time, the better. You have a scoring system for time spent at the level. Third point, time spent at the level is not as important as some of the other filters that you're going to use. So its max scoring, for example, we've used a max scoring of 5 here. Its max scoring should be less than the max score for strength of move away, for example. It's also important that it is less than the next filter we're going to talk about, which is freshness. Okay, so let's define what freshness means to start with. Freshness simply means, since price moved away from a level, have prices returned to the level. If the answer to that simple question is no, then the level is fresh. So to assess freshness, you're looking to the right of the level, this direction. as of the time prices are reaching this level now, before prices got here, was this zone fresh? The answer is yes. Why? Because before you had this candle, if I go to the replay and I put it, say I put it there, before you had that last red candle, which we know is here, this level was fresh. It's a rally, base, rally, base, rally, 2 levels on top of each other. Okay? Probably the second strongest formation you'll see beyond a gap, which we remember we said the gap is the biggest representation of an imbalance in price. This is probably the second strongest, having levels on top of levels. Okay, just a little nugget there for you as well. So before prices got here, this level would be assessed as fresh. You know that because you look to the right of the level, prices haven't come back to it as of when the market was like this. So if we play that forward or we just remove it, now prices have come to the level. So this zone is now being tested. When you are assessing freshness, freshness gets the same score than strength of move. It's important. It's very important whether the zone is fresh or not. Why? Again, we always ask why. Always go one level up. There's always one level higher up. Why? Why is it important for a level to be ideally fresh or as fresh as possible? Well, the reason is because within the methodology, the assumption is that there are orders left behind at these price levels. When price departs, when price leaves the level, there are orders left behind. Until prices come back to that level, those orders are deemed untouched, virgin, if you like, unmessed with, if that's even a word, untouched, all still there, relatively speaking. And it's a price level. It's not that because those levels could be 5 years old. They could be 1 week old. They could be 1 day old. They could be, 1 hour old, depending on the time frame you're trading. It's not necessarily that those institutions have, left an order there from 5 years ago and they've come back to it now. That's another confusion. Just a slight tangent here. It's that it's a price level of interest for you. It's a price level where you are wondering whether the institutions will begin to interact with the market again because they did it in the past. It's not that they've left orders there from 5-10 years ago. For example, if you are looking at a quarterly or a monthly chart, it's that it was a price level of interest 10 years ago or 5 years ago. Prices have now returned to that level. Is it possible that the institutions will want to interact with prices, with the markets at that level again? It's possible, so you keep an eye on that level. Okay? So when prices come into that level is being tested. Before prices return, that level is fresh. Okay? So again, talking about freshness, let's do some writing again. So what filter we're assessing now again is freshness. How fresh is the zone? And the question to ask is, have prices returned to the level since prices left the level? That's the question you're asking. Okay. If the answer is no, then the level is fresh. If the answer is yes, the level is no longer fresh. Now, remember I said earlier that strength of the move away and freshness should have superiority over, for example, time spent at the level within your scoring hierarchy. So where you see here where we were using a max score of 5 for our time spent at the level, you would want to use 2 or 3 times that max score for your max score for freshness and strength of the move away. So max score for a zone for a zone that is fresh should be at least 2 times the max score for time spent at the level. Okay. Should be at least 2 times. That's what you want, so that there is a hierarchy in your scoring system. Now, I'm going to take you a little bit deeper into the weeds. We're going to delve a little bit deeper into freshness now. So we've said we're starting with the basic premise of, have prices returned to the level since prices left? If the answer is no, then the level gets a max score, whatever that is. So if we're going with 5 for time spent at the level, this will be a max score of 10 out of 10. It's totally fresh. Prices haven't come back to the level. Where there's a sub-hierarchy is, if the answer is yes, that prices have returned to the level, then you have a substructure of, okay, so prices have come back to the level, but how deep into the level did prices get? Now, I have to caveat this and say you don't have to use this sub-filter. I mention it because you will have noticed already on your own charts that there are many times where prices keep coming back to a level and they keep rallying. And it's maybe the second or third time on the return to a level that you get the bigger move. So for example, even if we go back to this level of supply, look at how many times prices came back to this level before it eventually broke through the level right here. Okay. So if you were saying that's the first time prices came back, that it didn't come back there, that's the second time, that's the third time, before it eventually broke. So if you were assessing freshness for this level, when prices came back here, you could add the additional filter that we're talking about now and say, how deep into this price range, into this level, did prices get when it's coming back the second time now? So you've had one test, okay? Now prices are doing this over here. It's coming back again. It's coming back. It's about here now. And you want to assess this zone. This zone is no longer totally fresh, right? Because you've already had a first test here. So if you gave it a score of 10 out of 10 because it was totally fresh before prices returned to it, yeah, this second time it's not necessarily going to get a 10 out of 10, but it's not going to get a 0 either. Why? It's not going to get a 0 because the first test didn't make it 50% into the zone. Again, that's based on the concept of the orders. The assumption is if prices get anywhere 50% or less into the zone, that the possibility is that there are at least half of those orders still left, a significant enough percentage to maybe cause another move like you see here that happened here. That's a tradable move. The reason it's not ideal is often that one test may be what had caused all the orders or the majority of the orders to be removed, and then you have prices just blast through the level. We'd never know for sure. It's an assumption within the methodology. You never know for sure how many orders have been removed by this first test. We say if it's 50% or less penetration into the zone, there might still be a significant amount of orders in here, but we never know for sure. So if you're going to score it, you definitely want to score it less when it comes back in a second time, because it's no longer virgin. It's no longer untouched. It's been touched once here. So for freshness, you can have totally fresh. The second tier would be if it's been tested how deep was the test? You could have that. You don't have to. I'm repeating that because it's important. You don't have to. You could decide, I only want to do, binary system. Has it been tested or not? Yes or no? If it's been tested, it gets a score of 0. If it's totally fresh, it gets a maximum score. I don't want any drama, no additional filter. I want to keep it nice and basic and simple. And that's absolutely fine. Again, refuse to be boxed in. Okay? If you want to be a bit more nuanced and you're noticing when you're reviewing your notes and reviewing your charts and you're seeing that you're picking really good levels where prices tend to test once, a shallow test as it's called, then you get a rally, and then prices come in a little bit deeper, and then you have the big move. But if you had been scoring that zone, you would have scored it a 0, and then maybe you wouldn't have taken that trade because it would have affected your total score. This is one of the reasons, guys, that time spent at the level is lower in the pecking order than the other filters like strength of the move away or freshness, for example. It's one of the reasons, I should say. So you want to make sure that, and notice what's happened here. This is the classic shakeout, double bottom, whatever name you want to give it. It's pretty much prices going deeper into a level and then having the big move. So if you had gotten in there, put your stop below, you might have been stopped out before the big move actually comes. Okay, so to summarize, freshness. Have prices returned to the level since the level was created? If the answer is no, the level is totally fresh. It gets a max score, whatever you decide is your max score. Have prices returned to the level? Yes. You now have two options. You can decide, I give it a score of 0 straight away because it's no longer fresh. Or you can do a sub-assessment and say, okay, it's come back to the level. How deep did it go into the level? If it's 50% or less, I give it a score of 5 out of 10 instead of 10 out of 10. That's all. Time spent at the level, the less the better. Hierarchy, 1 to 3, gets the max score for time spent at the level. 4 to 6 gets a lower score. If you want to add 6 to 10, gets an even lower score, or you don't even add that. Okay? Final point, time spent at the level is lower in the hierarchy. So to finish, let's remove all the drawings. Let's talk about that hierarchy to finish. Your scoring hierarchy, you want strength of the move away that we've discussed. Away, higher in the hierarchy. Freshness of the zone, higher in the hierarchy. Let me copy and paste that real quick. Okay, and then time spent at the level, lower in the hierarchy. Okay, so if you're giving strength at the strength of the move away a max score of 10, for example, you want to give freshness also a max score of 10. You want to give time spent at the level, remember we said at least half of that, max score will be 5. If you decided strength of the move away was 20, freshness was 20, then time spent at the level would be 10. There's a spelling error. Okay, so that's the summary of the 3 filters we've talked about so far. Final point on these 3 filters. They are what are referred to as intrinsic filters, meaning they are filters that are specific to the zone on the time frame you are looking at. You're not going to look at time spent at the level at a smaller time frame, for example, unless you wanted to tighten it up, and that is a whole nother ball game where you might end up tightening up too much and miss the trade. If you are looking at time spent at the level, you really want to be assessing it on that time frame, whether that's a curve time frame or lower time frames. Okay, this particular kind of work is used on all the time frames, whether it's your entry time frame or your curve time frame or a refining time frame. You want to look at these intrinsic filters for that level to help you assess the quality. There are other filters you can use. As I said, there are many filters. There are filters that are deemed extrinsic to the level. So the location of the level relative to higher time frame levels, the trend of price as well could be another filter you add. All of those would be outside of assessing the zone itself. Okay, so intrinsic filters that should be applied to all levels, these 3: strength of the move away, freshness of the zone, and time spent at the level. Okay, so I'm going to end the video at that. It's 31 minutes, 1 minute longer than I'd hoped. But hey, as I said before, it's important to me that you understand it and that it's clear. So thank you for sharing the videos. Give it a thumbs up if it's helpful to you. Please share it. Let's get that YouTube algorithm spreading it. Thank you to all of you who've been doing that. Let's continue it. So I hope you guys keep well and keep safe. And if you had any questions, again, just contact me, storehouseanalytics@gmail.com. Whether you're interested in the video course, which is now 40% off, or if you wanted to join the roundtable for the monthly subscription, or you wanted one-to-one sessions with me, or both. All right, see you guys in the next video. Take care, everybody. Bye for now.